Welcome to JP Bullhound's Tech Talks. Today's the 18th of March, and we're here with Inge Heydorn for our weekly market roundup. In today's episode, Inge will give a market update and talk about Intel build-out and gaming. Over to him.
Thank you very much. We are a little bit more optimistic in the market. We're still hoping that the negotiations between Ukraine and Russia will lead to something. And on top of that, I think the market now have digested in the rate hikes from the US Fed. But remember, the elephant in the room, I still think, is what they're going to do with the balance sheet. And that was pushed out now to the next meeting. So the level of them selling assets on their balance sheets is still a question mark. And I think it will be something we will start focusing on ahead of the next meeting. So be aware about that. Going over to I'll start with the gaming sector. I think there are really interesting things coming out now. January was quite weak, so 5% down if I make it easy number across the board. And now we have had February numbers down another 4% roughly, and not a big surprise. But let's look into the numbers into detail. And the 4% I'm talking about is the gaming PC games, the software. So looking into that, I think the main issue here is that last year and the last few years, there's been a number of really AAA titles coming out in Q4, which has really been selling really well into January, February, and even March, like Call of Duty, for example. But this year, Call of Duty has been a disappointment. Battlefield, which was the second one coming out, also a disappointment. So taking those two out of the equation, I would say that the market is still looking quite healthy. And if you look at the new products coming out in the market, like Elden Ring, Horizon Forbidden West, Gran Turismo 7, the demand is really good. So we have a little bit of a mix effect. So I would say Nintendo doing quite well, Sony doing really well, while Activision, EA, not as good as expected. So that's on the gaming side, software side. If you go to the console side, we have had a massive drop of sales in February. So not demand driven, it is supply driven, and it's Sony. Sony has not been able to really deliver at all in February. So Nintendo holding up well, we're tracking it, and it's aligned with expectations for the quarter. Xbox is doing decently well, but it's Sony really that's standing out. And let's have a read through then into the numbers, which means software doing better, hardware doing worse. Both means margins will go up. Yes, sales will disappoint a little bit, but margins will definitely go up on the back of it. Then we have mobile down 2.5% roughly in February, and the games that are getting hurt is the things we've been talking for a long time here, is the games where you spend a lot of time in the games now when we're coming out of the COVID lockdowns. So the casual gaming side doing quite well, while the games like Roblox and so on, where you spend a lot of time and then monetize inside the game, that's where the struggle is. So the booking numbers coming in negative for Roblox in February is for us not a shock. And this will be a drag on their performance at least for the next 9-10 months, if not longer, and will keep the growth rate even in negative territory for Roblox for a while. So be aware about that. Okay, going over to the semi side and the news from this week, Intel is going to spend $88 billion in the next 7-8 years in Europe to build out factories, mainly in Italy and Germany. And this is the Intel spending. Then the government is going to subsidize quite a lot. So you could almost double that number, which means, let's put it in context, it's more spending in semiconductor factories than we've seen on aggregated level before. So Intel is spending more than anybody else has done, all the companies together before has done in this industry in Europe. So it's an amazing number. The question mark, will these factories then make money? Question mark. But for us, liking the equipment name, this is really good news, because now we're starting to fill the order books for 2025, 6, and 7 also. As they are sold out 22, they have a really strong demand going to 23. So very good news. And most other vendors will reply on this. So we'll see how far we go. Then the last thing I would like to highlight today is Accenture. And I think if you have time as an investor, please read the transcript and look at what they're saying. It's such a good barometer of what's going on in the IT world. It's such a large company. It's such a wide company, and they're implementing IT services and software around the world. But I think I would like to highlight a few things coming out from the results. Firstly, all their 12 industries they're focused on are growing double digits. All the products they're focused on are growing double digits. All regions are growing double digits. So the digital transformation is still ongoing. There's no doubt about it. Order bookings, record high. Comments regarding demand situation in Europe after the war, no effects yet, but a little bit wait and see there. But I really think Accenture numbers are really interesting in that sense. It's accelerating growth, the IT transformation still ongoing. So that was the take roundup for this week. Thank you very much. Thank you, Maria.